You're there to help them stay in the home. You did a great job getting them a loan. When the deadbolt goes and they're in, you want them to have the freedom to be able to walk out of the home to go do something, rather than saying, I'm home, and then be locked in.
Welcome back to Good Better Broker as we welcome in Michael Harris. He is the broker owner of United Mortgage Corporation of America, and he is based in Santa Clarita, California. Michael, great to have you here.
Hey, thanks for thanks for having me here, and then also making it not as cold.
Yeah, I mean, today is what, maybe like 15 degrees out there, so
Yeah.
it's a little bit of a heat wave based on what we have been experiencing so far this winter. A bit about you, Michael, for our audience: almost 40 years of lending experience. So you've done this for quite some time now, and you are very passionate about financial empowerment and helping homeowners achieve financial stability. As we kick the conversation off, tell me, why is that something you kind of hang your hat on?
It's something, I guess, from a younger age, my family, money was always a difficult topic. It was something that wasn't there. And my father worked very hard in a family business, barely getting much. And it was always a struggle. So it was always something and a passion I had to be kind of self-motivating in order to be, I guess, independent. And in doing that, it was about learning. It was education, where my degree is in business econ and finance, a psychology minor. And I was always out to make myself better. But originally my intent was to go into law. But that didn't quite work out. Who had the money to pay for law school? But it was about educating, but at the same time, it was educating in the field of money. And my first job out of college, professional job, was a loan officer at age 22. And I got started in the business, and the first call I ever made for the job was the receptionist, her name was Karen, have a memory. She said, "Are you looking for a loan processor or a loan officer job?" And the loan officer job sounded a little bit better, but I had no idea what it was yet. So I learned it, and back then, though some of you watching have been around a long time, but pagers, no cell phones, fax machines that the paper rolled back up, bubble jet printers, using 3x5 cards, all the fun things, and territories. We couldn't get loans from everywhere. We had to get it in a certain geographical region. So things have changed.
But as much as they change, they're still the same, because it seems like that aspect of financial empowerment has been a big piece of this industry for quite some time. Yeah. Do you recall when you first realized that a mortgage and being a homeowner could be a mechanism for a consumer to achieve that financial stability that we touched on at the top of the conversation?
Well, absolutely. The thing that was difficult at 22 is I'm sitting across the table at a kitchen table to someone who's in their 40s or 50s or even 60s, and I'm telling them I know what I'm doing. And that's a hard one. And when you get started, you got to come from a position where, let's say I didn't own a home yet. And you're talking about owning a home when you don't. So that is something you have to overcome, and also your experience and why they're listening to you. Thing is, with technology now and information moving so fast as it does, people are a little bit more educated up front, and they're able to get information. So you have now a check and balance. Before, you had no way to verify anything, and you were kind of trusting. But I found, it's understanding, as I do now, how a mortgage works, because a mortgage works with an amortization, and because of that you pay a lot of interest early, and when you do so, your balance doesn't go down. But of course, in California, you bought a property back in the 80s, well, next year it's worth 20% more, and people were getting rid of their PMI. Oh my God, you buy a home, you got money. And of course, that's what people were looking to do, gaining equity, moving up, and gaining money by using real estate. And that was partly the talk until various timelines and financial crisis. But overall, of course, it's gone up.
You were telling me that at this point in your career, you're kind of working backwards. Yeah. What does that mean, Michael?
Well, I stand back. I'm teasing. The thing is, as I mentioned, at 22, I was looking for people my age, your age, and other ages, of course, that were experienced in the business. As to referral, CPAs, business managers out in the Los Angeles market, of course, the entertainment industry, celebrities, and other people who handle finances. when I was 22, reaching those people, I was doing very, very, very well. But the problem is they got older. Time didn't stop. And because they got older, they weren't there for me anymore. So now I have to look backwards to people younger than me. So as we're filming this here in February, I'm going to be 61 this month. And I'm looking 61. I got started when I was 22. And now I'm looking for the 22, 30-year-old who has that book of business and is established as CPA, divorce professional, business managers, all those people. So I'm going backwards to go seek those out.
Interesting. It all comes full circle.
Yeah.
And it certainly has for you. Part of your approach with getting your name out there, getting your brand out there, and getting your message out there is through a weekly radio show that you do in your local market.
Right.
Tell us about this and how it impacts your business.
Well, it's something back in the day, radio was where it was at. Everyone had their transistor radio and they listened to a 1-hour show and they listened to the whole show. Now I'm happy to hear a segment, right? Or they go find it on YouTube or they're finding it on various other ways to go get it. Somebody who has an hour to go listen to my show, I'm not sure that's the perfect client anymore. Back in the day it was. But we used to get over 100 to 150 phone calls during the 1-hour show, during the show. Now I'm happy to see maybe a fifth of that. But the thing is, you're funneling it even more to the people you're looking for. So usually it's a better person who's calling and not just the person who wants to be on the radio. So the message has changed. But in doing that show, I have a weekly topic, but also it's talking about what happened last week, this week coming, talking about general terms, not confusing someone so they drive off the road. But it's understanding kind of what you do as you do your programs and educate. You want to educate, but if you give them everything, they try to perform their own surgery. So you got to be careful not to do everything. But I found, depending on your market that your watchers or listeners are in, you can do this, but it depends on how you're using it for your benefit. You can have radio interviews with realtors. They put it out to their database. You're able to broaden your perspective with them, and you're not looking for the client. You're trying to help the realtor, so you get referral. Imagine if you had 10 realtors that you interview during a year, and each one of them give you one deal. Not a bad thing.
All right, yeah, for sure. And that's why you were telling me that obviously you pay for airtime to do this radio show. And I think that people who hear that say, well, why am I going to do that? But you believe it can be an expense or it can be an asset. And for you, it's certainly been an asset for the reasons you just mentioned, right?
Right. I mean, I was still getting business from people I got business from many, many years ago. And then I'm getting the kids' business. I mean, one of the loans I'm writing right now that's here is, it's actually, I remember when this person was born, the day he was born. And now he's married with his first kid. And I originally got his father and his mother's loan. They were listening to the radio. And now all of a sudden it's generationally moving. So even if I was stopping the radio, things will happen regardless. And that's the scary part. And then, of course, when I stop the radio, if I was to, what happened to your show? Well, what happened to you? I need you now. So it's one of those things where it becomes a crutch almost, but you can use it. You can change your branding to it. You can bring in, as I have, a trust, someone who does estate planning, and she comes in and talks about various issues there, and having guests, and occasionally they can record their spots. They don't have to be in the studio.
Yeah, I love the aspect of bringing in different people from the industry, and it doesn't have to be somebody who's necessarily a realtor, like you said. They can be a CPA, a divorce attorney, whatever the case may be, but it's all part of your sphere, which I think is super smart. You're not just limiting yourself, though, to the radio, because as we know, people now, especially the younger generations, consume their content in much different ways. And so, accordingly, you now have a YouTube channel. How does that help you reach different demographics?
Well, it's a work in progress, because as an older individual now, as I categorize it there, I'm trying to get that to be watched. And of course, we start getting people liking and doing and whatever, and it starts trending, and doing the right things, whether you're adding extra 1 minute, 1.5 minute, 2 minute segments of things, and doing the right splicing and editing and all the fun stuff. And the problem is I don't want to take over what I do, because I do loans. But in taking that 58-minute show and putting it there, it could be found. So now it's a question of having it found by that younger generation. So that's my new direction. The thing I found is, and those of you listening, some of you will agree, of course, if it's not on YouTube, it's not correct. So I got to get it correct by that younger generation. But sometimes being on radio is saying, hey, I'm on YouTube. The radio audience doesn't care about YouTube, and the YouTube audience doesn't care about radio. So I'm kind of going back and forth as I do that. But as I'm able to gain that traction and maybe a little bit of more following, that's going to allow a little bit more business there. And then hopefully it balances out a bit.
One of the main topics that you focus on in your content, Mike, is having a perfect financial GPS.
Yeah.
Tell us what that means.
Well, when you're driving in your car, and maybe you even know where you're going, but you want to get there faster because you don't know what's going on out here with the snow and all that. You don't know if there's some kind of accident. And imagine if you're going down a 50-mile highway, 2 lanes, and all of a sudden, mile 46, the bridge is out. Oh my gosh, you got to make a U-turn. And how much time did that take? It would have been nice to know that the bridge was out earlier. So why not do that with your finances? So I aligned myself with a company a few years back, which is a perfect financial GPS. And what that does is it gives you all your items, your monthly, your quarterly, your semi-annual, annual items are all inputted. And it could be you, the loan officer, or it could be your client, or even your realtor or other referral partners. And you would get a date in which you'd be debt-free. And it's not eliminating the principal. This is not debt settlement and any of that. But it's using technology to be absolutely perfect. Because if you have 6 decisions to make, there's 720 factorial math decisions. Imagine getting it right one month and then, good luck, let's do it again next month. Imagine if you have 20 decisions. Holy cow. So it's getting the right information. Now, personally, I took 26.4 years for my debt. I was taking it down to 12.3 on my own. Not bad. Through the program, it took me down to 7.9 years debt-free. That's what I'm trying to get that message out also to other mortgage loan originators who are able to help their past clients retain their clients, get more business from those clients, but also reach out to their partners, the realtors, in order to activate their database. And then I'm looking to help train and have those individuals learn. And I do this throughout the United States. So I talk to many loan officers and help them get more business.
It's so timely and topical too, because when you look at the debt situation in this country right now, it's staggering how much people have in credit card debt, and it just keeps going up. And a lot of times they have no idea how to get themselves out of that. And the fact that you are literally showing them very strategically what their debt-free day could be and how they go about getting there, I can only imagine some of the reactions you have gotten when you lay this out for people.
I mean, people, if you're on Zoom, they fall out of their chair. I mean, when you give them the numbers, I mean, I had a 63-year-old. His current plan was going to get him debt-free at age 90. Okay. Under the plan, it's debt-free at 70. Now, mind you, he had an interesting response. And of course, you still get those. In lending, we get weird responses, and we have to go to those. He said, but what happens if I'm not living at age 70? Well, you're not living at age 90 then, are you? So he says, well, what happens if I change my job in 5 years? Well, you'll have 2 years of debt left. And he was a truck driver, and he worked for a large company. And I told him, I go, well, maybe, and people will recognize, maybe you'll be the person at the exit now putting the yellow line through my receipt instead of driving the truck. Maybe with 2 years of debt. But we've seen it with younger, middle, and older, depending upon where they are in their life, whether they're looking to save for college funds. But we have individuals who say, oh, I have no debt. I just have a mortgage, a student loan, and a car. You have no debt? People will take it differently. And then when the student loan piece, it was in forbearance. And now all of a sudden it's not. Now they have more interest, more debt, more items, and they're going, holy cow. And people, oh, that doesn't count. And that's some of the stuff you hear in that side of the business. But then that's where our educational component comes in. You don't have to be licensed to work in this space that I am on the debt space. And it goes perfect because we have, when you have a client and have an application, you have majority of their information, but we want to know about the other stuff, the gas, water, power, electric, what's the out. We want to get discretionary money. So we get a little bit more, but bottom line is it's so powerful when you're going to increase their credit scores, pay off debt sooner, have more, the credit limits are not going to be as approached. They're going to be lower on their debt. And then all of a sudden they're ready to buy another property or add to a portfolio. And oh my gosh, that goes hand in hand with what you do. And then they're referring you because you're the guy or the gal that helped them out. And that's where this whole thing goes. And it's the enthusiasm, as I said, 39 years and I'm still out of my chair here. And when I see that happen, I know I did it right. And it's not that hard to do that. And to have that also lead to what I do best, lending, it's a perfect storm.
Yeah, it fits together so well. Basically positioning yourself not just as a mortgage loan originator, but truly as a financial advisor.
Right.
It seems like there is massive opportunity for other LOs and other mortgage brokers to do this. How do they get to the point where they think the way that you do, not just as somebody who's going to take a loan from submission to clear to close, but also somebody who can truly help reshape somebody's entire financial situation?
Well, it's a mind meld. I'm teasing. There's of course I could be reached via phone. The whole concept here is interest rate versus interest volume.
Can you explain that?
Yeah.
Because I want to make sure people understand what that means.
Yeah. What happens is when you get a home loan, and now we have a closing disclosure. When you see that closing disclosure on the bottom, it says TIP, total interest percentage. And a lot of times now with rates right about 6-ish, people are seeing that over 100%. And it's always that, ignore that man behind the curtain. You don't, okay. But that number is if you borrow $400,000, you're paying over $400,000 of interest. So that total interest percentage is the amount of interest you're paying over the life of the loan. Yes, you have a rate. Yes, you have an APR for the cost of the money. But that's the amount of money, total interest volume, the volume of the money that you're spending and paying back. So the goal of this perfect financial GPS is eliminating that interest footprint, taking it down to a lower level. In other words, 6 could ultimately be almost a 1% number. But it's taking down, if that debt's being paid off in a third or half the time, that interest volume went down. You're paying your principal, but you're moving faster through the amortization schedule. And of course, people are saying, well, I could do this myself. Should I just round up and throw an extra 100? But the discipline isn't there. And now you're throwing darts. And I liken it to playing the game of golf, where if you're playing the game and you're at the par 3 and you're hitting the ball, do you want to be in the water, the sand? Do you want to have a provisional? Do you want to get on the green? Do you want a 2-putt? Or do you want to be in the hole? So the goal is to get in the hole. And those of you who play miniature golf, that windmill keeps going around and around and you can't freaking get the ball through or that pole's going back and forth and it keeps on hitting your ball away. You don't want that in your finances. And that's what you should also be pushing out to your client. You're there to help them stay in the home. You did a great job getting them a loan. When the deadbolt goes and they're in, you want them to have the freedom to be able to walk out of the home to go do something, rather than saying, I'm home, and then be locked in. And that's the thing. You did your job. But I say this all the time, be careful what you wish for. I might get it for you. Because I might get you the loan that you can't afford because I was able to do it because I'm so darn good at it. But I got to make sure that they're actually comfortable and that's what they want.
I think that's such a great point, right? Because it's one thing to achieve that home ownership milestone, but then come all the other expenses of life and the things that go with it. Getting married, having children, having to take on expenses, whether they are expected or not.
Yeah.
And it's crazy that there are so many people who, despite having massive amounts of equity and maybe even having an interest rate that's fairly low,
house rich, cash poor,
exactly, have so much debt and they have no idea how to navigate their way out of it because they're staying in their home and they're truly happy there and they think that, I got no other option.
I mean, because courses in school really haven't had that education and they're pushing for a lot of that all the time. But people are following what others have done. And I liken it to another analogy. It's like when you see a long line and you go, gosh, everyone's in line. Let me get in line. And you get in the line and you tap the person in front of you. What are we in line for? That people are just doing what they've always done, but don't understand if it works for them. And everyone is different. So when I run people's numbers, the results are different for each person because everyone has different monthly, quarterly, annual, semi-annual items, and those have to be accounted for. And if life changes, as you just said, those items can be updated. Those items can be inputted, new expenses, new income, temporary expense, maybe a 0% credit card for 18 months or something, and whatever. All those things could be accounted for. And it's not difficult in having that work 24/7 for you, giving you the best information, giving you the answers and everything logged in there. And no one's touching your money. This is giving you advice and information. No one's accessing your accounts. No one knows even your name on your own login of your program. So there's no security issue or breach. So it's all very easy to understand. And that's the part, it's having loan officers, mortgage loan originators understand and then being able to convey that. Now, it's not a new profession. It's not something that they have to go reinvent themselves. There's coaching, there's various things where even for lack of better, I could be doing it and they could participate. And that's something that could be gone over at a later time.
So for people listening to this and watching this, if they want to learn more about the Perfect Financial GPS, and I know that you kind of offered up your services and
Sure.
Earlier, but let them know how they can reach you and learn more if they want to implement this into their own business.
Well, one thing I wanted to do is when I mentioned about interest volume, I set up an email that it's a one-way email coming into me, and then we can communicate. But if you want to drop me an email, interestvolume@gmail.com. Made it very easy. A lot of times I can do what I talk about, ahead for money. I can do various things with a phone number. We can start to going over videos and things. Let's make it easy. Drop me an email. Let me know your name, your number, and of course I'll have your email, and we'll chat. We'll understand. I'll send you some items and see if it's right for you. And whether 1, 2, 10, 100, 200 people respond, no problem. We're going to make sure that more people are educated about money and understanding how it works. And we got to hit families and households one household at a time.
Yeah, especially with this younger generation and trying to get more people to stop paying rent and start buying homes. It's such a valuable message to put out there, and we really appreciate you sharing it with us and our audience. So,
by the way, this does work with renters. You don't have to own a home to have this GPS work.
Great point. Even renters have debt as well.
Yeah. So I had someone who was 15 years to be debt free, and we took him down to 3.2 years. And she's right now 2.5 years in. She's down to her last almost 6 months.
Man, it's a dream for all of us, right, Mike?
Yeah. And then she's going to be ready to purchase.
Fantastic stuff. Well, again, we appreciate you having you being here, and continued success to you and all of your efforts. Michael Harris with United Mortgage Corporation of America. Thank you for being here.
Thank you so much. Appreciate it.
Be sure to subscribe to our YouTube channel to be notified about new videos, as well as your preferred podcast platform for a new episode every other Tuesday.